Hello, Oracles. Whew, well, what a week it's been. I've been working very hard this week, very stressed, and I still have a half a day to work tomorrow. But man, we had Tesla's finally the We Robot event last night, had CPI data come out, had some things in the market going on. So we'll discuss all of that shortly. Let you guys get in here. I see a couple of you already. Poor yep, Tesla is always going down and facing huge financial issues. Yeah, I mean, the financial issues themselves. I don't think Tesla has financial issues. I don't think that's a problem. I think the financially they're perfectly fine. They're going to be super strong going forward. They have a giant cash pile. Their margins are bottoming. I don't think they're going to go much lower based upon the fact that interest rates are getting cut and we're seeing better sales numbers and better production coming out. So Tesla's ramping up production. They had to scale back on production because they didn't have the demand. Now they have more demand, so they can pump up the production. And even if for some reason demand takes off again, which I don't think it will, but if it does, they have production to keep up with that. So financially, I think Tesla's perfectly fine, but the stock is going down for an entirely different reason. Yeah. Yeah, want the stock to sell off harder than this. So I want to load up between 150 and 180. Totally possible. I think it's in the realm of possibilities, especially if we get a recession, which the majority of the market, 80 to 85% of the market, is not pricing in a recession. So, maybe we don't. Maybe we do get that soft landing, and this is great, and we can all go up from here. That'd be phenomenal. I'm still erring on the side of caution for the next 12 months. That's all. That's all I'm saying is the next 12 months for me is until I see it, especially June. Even I'll give it till June, about 8 months. If we get to June and we've got ourselves much cleaner data and don't show any signs of any recession, then I'll be in a much happier place and I'll be a little bit more bullish. But till that time rolls around, I'm still going to be very cautious. Yeah, exactly. And when it comes to Tesla stock, and I'll discuss that in a minute, obviously we saw a massive sell-off in the stock price today after the event yesterday, which again, historically, we have always seen a sell the news situation. And I think it's gotten exaggerated more and more over the years because now it's like, all right, we're now expecting something actually good. And before, usually the news would come to fruition a lot sooner. And now we've had a lot of these events where nothing has really come to fruition entirely. So here was another event, and even Elon stated, we won't see anything until 2026 or 2027. So it's like Wall Street doesn't care. Wall Street doesn't care about anything out past the next 12 months. So we've got 12 months. And if Wall Street saw something that they can say, hey, this is going to be awesome in the next 12 months, we would have seen something go up. But when we're talking 2-3 years out, Wall Street doesn't care. That's why the stock sold off today. So again, for very long-term investors, if you do truly believe that these things are going to come to fruition, which I myself do, even if it's 5 or 10 years out, the stock is going to be great long-term. And for anybody who isn't interested in buying anything else but Tesla, this is a great buying opportunity. For me, I have seen plenty of other opportunities out there, a different investing style strategy that I'm going through right now, and it'll give me an opportunity to bring in more cash and have more freedom of time while being able to have an opportunity to buy more Tesla in the future. So I think we have a lot of time for long-term investors when it comes to Tesla. And short-term investors, if you guys are going to be swing trading, maybe now is a good time to buy. But my thoughts on Tesla in the near term, and we'll call it the next 6 to 12 months, is I think everything we heard last night is going to be irrelevant for the next 6 to 12 months. It's going to mean absolutely nothing unless of course, Tesla does next year, in the middle of next year, say, we have now solved FSD and we can turn those Model 3s and Model Ys in Texas and California into robo taxis. If that comes to fruition in the next 6 to 12 months, cool. But again, we still don't know that. I think the more important catalyst we're going to see in the next 6 to 12 months is the compact car. Now, of course, we didn't hear anything about it last night because we didn't want the Osborne effect. I thought maybe Elon would have alluded to the fact that, it's going to be basically the same exact vehicle, but with pedals and a steering wheel. He had told us previously that that's what it was going to be. So I thought maybe they would at least mention that, but he didn't. And I think they didn't mention it at all, just strictly because of the Osborne effect. Because if they are going to be going into production of this in Q2 of next year, you don't want people saying, oh, well, if it's going to go into production in Q2 of next year, I can easily wait 6 to 12 months to get another car. I don't need to buy a Model 3 or a Model Y now. And a lot of people will kick that can down the road, thereby Osborning all of the sales that they would have had over the next 3 months. And of course, now coming into the last quarter of the year, Tesla is already on pace to come up short of what their overall sales were last year. So Tesla doesn't want to fall even shorter of that. They want to push and at least kind of break even and maybe beat it by a few thousand vehicles. So if they can do that, that's great. But if they told anybody about the Model 2, that compact car right now, all bets are off, and they would never hit that number. So I think what's going to end up happening is what basically the most important catalyst over the next 6 to 12 months, other than potentially FSD, not a potential, but a real true catalyst over the next 6 to 12 months, is going to be the compact car, which we don't know details about yet. And I think what they're going to end up doing is probably in Q1 or Q2 of next year, they're going to announce that it's going to be going into production, but not give us any specific dates or anything like that. But they're secretly going to start the production of this vehicle. We already know that you have to go through the pre-production phase and all that, kind of work out the kinks, get those first few thousand vehicles produced to kind of get all the bugs worked out, and then they can actually start hitting true production. I think they're going to quietly do all of that in Q1 and Q2 of next year, and then right after we end up getting Q2 earnings, I think at Q2 earnings they're going to say we are going to be getting a product launch coming up soon. They'll announce the product launch, and perhaps in June, it will end up coming out at the annual shareholder meeting, and they'll discuss it there. They'll announce it. And because they've already done all of the pre-production there, they're going to say, and it's going to be for sale like next week, because this way they're going to minimize. They really want to have a very minimal window of time between the announcement and the actual launch date, because they want to be able to recognize those revenues immediately without feeling the cannibalization of the Model 3 and the Model Y. So I think timing-wise, we'll probably end up getting that around June of next year, and that's going to be a much, much bigger impact on the stock than anything we heard about last night. Yeah, and as my dad says, Musk is promising something in a couple of years that Waymo is doing today. Have yet to see him hit a timeline. And so he's not wrong. And, obviously Waymo is out there doing this. Cruise is out there doing that. So we already have these on the road. China has them as well. So it's not like this isn't, anything new to the world. The difference is they're doing it in geofenced areas with LiDAR and other technology, whereas Tesla's plan is to be able to do it on a grand scale, not geofenced. So that is the plan. So again, he did mention Texas and California. Maybe they do geofence it to the states. And again, he also said, there are some states who have regulated already that this is totally fine. If they have level 5 autonomy, have at it for the entire state. So I think, as we had mentioned previously a couple of years ago, that when it comes down to what's going to end up happening in Tesla's case for FSD and robotaxis, is it's going to go state by state before it gets nationally regulated. So certain states will have it, certain states won't, and I think we'll go that way, almost like a cannabis type thing, where it's going to be state by state for regulations until we get that total national recognition of it. But Waymo is actually going to be doing a great job of laying the groundwork and setting up these cities like a San Francisco. Like, I think it's in Phoenix. Correct me if I'm wrong, but I think it's Phoenix. So these cities that Waymo is already in, people are now becoming more accustomed to this. It's becoming more natural to them. You put it into a New York City who doesn't have anything like this, and people are gonna be like, hell no. They haven't broken that ground yet in New York City. So they're gonna have it in other cities first and kind of get people used to it, and break it in there. And Waymo is doing that. So when Tesla comes out and says that they're going to do it in cities like San Francisco, it's going to be kind of a seamless transition. Whereas if you start doing it in places that don't have a Waymo, then it's going to be different. So with Tesla, if they can actually manage to pull this off, which I do think they will, but again, if they can make this happen, it's going to be that leapfrog effect. What's going to happen is, whereas Waymo is going to be geofenced and they're working on very specific cities to get into, as soon as Tesla gets to that point where they can flip the switch, they're going to flip the switch and leapfrog over Waymo to be able to take over in all the areas that Waymo is not. But again, when is that going to happen? And even Elon is saying they're not going to be having this mass production of robotaxis until 2027. So we're not going to have volume production for another almost 2.5, 3 years. So it's like, cool. But again, for anybody who's wondering why the stock is down today, that's 3 years out. Wall Street doesn't give a crap about 3 years out. What are you going to do for me the next year? That's what they want. So that's my thoughts on it. And again, I think it's awesome. Optimus obviously saw some great progress on Optimus, but again, that's going to be a minimum 5 to 10 year out kind of project that they're working on. So, again, you long-term investors who are like, I'm going to be in the stock for 20, 30, 40 years, forever for life. It's going to be great for that time span. But anybody who's trying to invest in a more near-term type of investment, not going to be, nobody cares about that. The van that they showed was kind of like we already expected that. We had discussed it previously how we anticipated a shuttle type vehicle just like that, and you'll see it in places like airports, like a Warner Brothers studio that they have it. Different large places like zoos for parking lots and doing shuttles around parking lots like that. I think that's going to be ideal for places like that, at least to get started. And then once it gets started there, then we'll see, all right, once we get more of the automation and robo taxis on the city streets, then we can get vehicles like this on the city streets as well. Thinking about San Francisco with, the trolley cars that are going out there, or you got the T up in Boston, things like that. You can do that. And even my son in Kansas City, they've got the little tram thing that goes right from their campus all the way into downtown Kansas City. So they can have something like that in the cities as well. But again, if you've got a city who already has something like that, and for him, it's free to take that all the way into the inner city, and they're working out, they're almost done with the construction. So once they get to that point, what is the point of it having it there? But maybe it is going to be overpacked. Maybe you do need those extra vehicles out there. But I think that's how that's going to go. But again, that's long term down the road. Like that wasn't even a prototype that they had last night. That was just something else that they were using entirely. So, as Elon said, this is something that they will end up producing, but that is not what they have produced. Let me see what else. And then, so overall, I mean, the event was basically as I expected. I didn't think it was going to be anything other than a hype show and something about long-term future, thinking about, anybody who's seen the Iron Man movies, something very much like a Tony Stark coming out there and showing things, but Tony Stark is like, hey, we have this now, whereas Elon is like, we will have this in a few years. So he's almost like Howard Stark. So imagine Howard Stark when he was presenting things in Captain America, the movie. So sort of something like that. When, Howard Stark is like, hey, here's the car of the future, it's going to fly, and then it doesn't work entirely. He's like, well, yeah, this is it's a few years down the road. So I think Elon is very much like a Howard Stark, whereas we don't have the product yet. We have the concepts, we have the things in the works, and I do truly think that we will get there, but it's not there yet. And so that's just kind of where we're at. And again, super exciting. I thought it was great to see the things that they're working on, but until we actually get to this has been solved, FSD has been solved. We have this vehicle. This is now here. The Cybertruck came along. We got the Cybertruck. Now we're, getting to volume production on Cybertruck. Cool. So we did get that. It's just, that the Cybertruck isn't going to be as much of a game changer as FSD, obviously, Robotaxi, and the compact car. So once we get to that point, then we'll be more excited. And honestly, I think that's what I'm most excited about is the compact car coming out next year. Because if they do end up putting into production in Q2 and we can hit volume production by early 2026, I think that's going to be a much bigger game changer. And then when it comes to the stock price, once Wall Street can say, all right, now we have the compact car, now we can start putting some revenues attached to something, because they can't even put revenues attached to FSD right now because Tesla doesn't even disclose how much revenue they're bringing in from FSD. So because of that, they can't even attach dollar numbers to that. It's just kind of a guesswork. But if they can say, all right, now we can see here's a new vehicle. This is going to be a mass sales revenue vehicle. We're going to be able to get this out there. When is Tesla going to scale up? Now we can go back to those days where we were following, production ramps on all the vehicles. Here's production ramp. Here's, volume sales, and here's the sales and the production on everything. When we get to that point, the compact car, I think, is going to be very production constrained to meet that demand, because I think demand is going to be very high for that vehicle. Then we'll get to that point of, all right, cool. Now we can start chasing production and delivery numbers again. Now we can start putting revenue and attaching revenue to those production and delivery numbers. Then you can start really seeing the stock price tick back up again. But until we get to that point, we start getting that concrete data and numbers coming in, we're not going to see too much. Let me see. Not sure if true, but read Tesla is less than 50% of EV sales in California. Invest for tech, not cars. Now, when you say 50% of EVs, so all EV sales in California, they're less than 50%, which I wouldn't be surprised just because of, there is competition out there. In the US, it's not as strong, but obviously California being the leader in that, does that, yeah, 50% of all EV sales. Yeah, and the rest of the sector, and that's the thing too, is when you're investing for Tesla, there's obviously Wall Street is looking the next 12 months out. The next 12 months out. Oh, so all EVs, yeah. So 50% of all EVs. I mean, still 50%. So they have half the market. That's pretty good. And just laws of numbers, that their percentage of sales are going to come down as any competition comes in. So that's naturally going to happen. But going back to the tech pieces, looking at how you're investing for Tesla, Wall Street obviously looking out 12 months is, what is Tesla going to be bringing in for revenues in the next 12 months? Obviously, the majority of it's going to be coming from automotive sales, and then you're going to have energy. That's it. Again, they don't disclose FSD, so sure, they're bringing in some money from that, but what is it? And we don't know. And honestly, if the take rate is under 10%, is it really moving the needle all that much? So realistically, probably not. And that's what Wall Street's looking at. So now if you're looking as a long-term investor and you're going to invest in Tesla as a tech company, that is a totally different game, because at that point, you're going to be looking at margins that are going to be significantly higher, revenues that are significantly higher. But when is that going to happen? So, that's obviously something you have to do on your end, is decide, when do you think this is going to happen for Tesla? Do you think it's going to happen for Tesla? And at that point, how much of your portfolio do you want to have in Tesla based upon your decisions on that point? And for me, I do think Tesla is going to get there. I think, by the end of the decade, Tesla is going to be an entirely different company than they are right now. I think Tesla will be known as that tech company by the end of the decade, but over the next 3 years, probably not. They're going to be making that transition over the next 3 years. Probably in that 5-year time frame, they're going to be like, okay, we're going to have a lot of light bulbs going off in Wall Street that are seeing what's happening. And then 2029, 2030 is like, all right, Tesla's now definitely a tech company. Now we're going to invest in them as a tech company. But again, that's 5-6 years out. So between now and then, the stock price can do just about anything. It really is kind of up in the air. Then, of course, you look at the economy. The economy right now, again, the market is pricing in 85% of chance of a soft landing. And maybe we get it. That'd be awesome. And if we can get that, that's cool. But if we get a recession, then all bets are off. And who knows what's going to happen with Tesla? Going back to Stonk's market up here, looking at a 150 to 180. Heck, you get a recession, we could come down lower than that. We have a gap, and I know so many people hate when I talk about the gaps down below, especially when Tesla is doing well, as they have been as of late. But I just like to make sure that everybody is aware of these things. And when we came down and went all the way down to 100, I got so much hate from everybody talking about the gaps coming down. And Chicken Genius was out there talking about stuff, and everybody was hating on him. And he called it, and it actually went way lower. He was calling the 240, and everybody was screaming at him for that. And then it hit the 144, like I was calling. And then we got down and we filled that 100 gap, or the 110 gap. And then we got down to 100. I'm like, so anybody who thinks that it can't happen again needs to go back and revisit what we saw in 2022, because it got there and it can get there again. You just need to make sure it's on your radar and know that it's a possibility. And, again, the reasons why it got there, nobody foresaw. Nobody foresaw Elon selling off the shares that he sold, which basically marks the top of the stock price itself. So, he was selling on the way down, and he sold at a lot of different levels. It's not like he sold at the top itself, and he had all those sales pre-planned. But that timing of that did end up marking the top, and then it just toppled down from there. We got the war in Ukraine. We got the entire the interest rates were going up. So some people did anticipate interest rates going up and all of the tech selling off, but all of tech sold off. Tesla came down with that, and then just the bad news after bad news after bad news, and boom, Tesla got all the way down. Now, of course, obviously it's recovered significantly since then. We've more than, doubled from that point up. But again, it's happened before. Just be cautious. It could happen again. The entire market right now, depending on who you talk to, is a bit frothy. We're a little bit higher on the valuation side. So it's like, if we are going to get a soft landing, how much more up do we have to go? And recession or not, we typically get, a bit of a market correction every year, and a more significant market correction every other year. So obviously, we had a big one back in 2022. So we had a couple of small 7% corrections this year, but that's it. We haven't had anything of a bigger sell off in about a year. We had that thing last October, we got down to the end. Last October, we had a little bit of a sell off there through September and October. And since the end of last October, we've basically been up. We really haven't had, other than those two little dips, haven't had much of a sell off. So, people are like, you can't say that, we need to sell off because we are due. But I mean, you look at the valuations, it's just a time for, there's only so much the stock market can push up before it needs to kind of take a breather, sort of like, lifting weights. And when you're out there lifting weights, you can push and push and push, but eventually you need to let your muscles recover, and then you can build up stronger from there. And that's kind of how it works is, you lift your weights, you give your muscles a day or so to recover, you let them heal over, and then you can push stronger and heavier weights. So the stock market is really no different. John, yep, you called it. John and I have been talking in the comments on my other videos, and he said the same thing. And he and I agreed. We had a feeling that we were going to see, going up into the event, deliveries were obviously going to be in question, how it was going to go. Deliveries came in as expected. So a little bit of a dip, but we kind of ran up into the event. The event was going to be basically a nothing burger for anybody who was interested in anything in the near term. And it basically was a nothing burger. We didn't get any concrete stuff that is coming out right now. And it sold off. And that was that. And now we wait until earnings in a couple of weeks and see what earnings have to show. But quite honestly, we saw, a miss when it came to the whisper numbers, when it came to deliveries, which means that now we have to wait on margins. How's margin going to be looking? I think energy is going to be a very bright spot for, no pun intended, but energy is going to be a bright spot for earnings. I think we're going to see some nice growth there. And it's going to be a sleeper over the next few quarters that people are kind of like, not really taking energy into account, but it's actually going to be a lot bigger than people think. But either way, that's kind of going to be a sleeper. And then we're going to be looking at margins. What are margins looking like? And Tesla's been doing a lot of these deals for financing. Heck, right now they're doing a 0% APR on the Model Y as long as you take FSD at $8,000. And I think, and if you're doing a vehicle that's already in stock right now, that's on one of their sales lots, they're going to do FSD for $7,000, and then you get it for 0% APR. But Tesla has to pay in order to get that kind of financing, so they're taking the hit on that end to be able to increase the sales that are out there. So how are margins going to hold up? Again, just things to pay attention to when we get to earnings, and seeing if, where we're at with that. And of course, earnings coming, is like basically 2 weeks before the election. Who knows where we're going to be with election uncertainty, which we really haven't seen any market sell-off or uncertainty due to the election like we historically see. So like not seeing history doing what it has done in the past when it comes to the uncertainty and sell-offs in the market due to elections, due to a lot of the other data that we've been getting, is kind of almost concerning me. Like cool, I would love for us to get through this and not have the same things happen. But it's like, is there something going on that we can't see? And this can is just getting kicked down the road, and it's actually going to be worse when it actually does happen. Again, hoping we don't get there, but I always keep that in the back of my mind. Paul, hello, Oracles. I love it. I love it, Paul. Yeah, the robots were improving quickly. I agree. Obviously, a long, long way to go when it comes to Optimus for what Elon is talking about. But considering where we were last year, look at where we are now. Walking around with everybody that's out there. And I mean, I've seen some great tech going on over in China right now. And it's wild how little we actually see of what's going on in China. And, I really encourage everyone to get out of this country, to visit other places, to see what is out there, because you really have to go searching for what is going on around the world when it comes to normal, basic US media that's going on out there, where they don't really portray a lot of those things that are going on around the world as they truly are. And so there's a lot of stuff that's going on, and China is very high tech. They've got robo taxis on the road. They've got robots that are out there, humanoid robots that are more advanced than Tesla's right now. Now, they don't have the AI in them, but their actual functionality is better than what Tesla has right now. So that's that's really what you have to pay attention to is, kind of dig a little bit deeper to see what's truly going on around the world. And Tesla right now, compared to China in some areas, is behind the eight ball. And so they're kind of having to push. And I think that's a reason why Elon is pushing as hard as he is to get these things out at the pace he wants to get them out at, is not because we have anybody here in the US that we're competing with particularly. It's more so in China. Oh man. Yeah. So all in all, it was a good week, and you guys can let me know. I mean, did you guys buy any shares on the dip today? I did not. But I did add to my portfolio. Actually, let me bring it up for you guys. I'll because I ended up having some of my dividends paying out today, and so because I ended up having the dividends paying out, I let's do this. Get that out of here for the moment. Do that. Yeah. So because I ended up having some money coming in, I ended up buying in. And I'm almost ready to move to the next phase of my plan. And the next phase is phase 10, and then I get to go to level 2. Super excited about going to level 2 of my plan. It's like those little stepping stones along the way. It's like any goals that you have in life. It's cool to, like, obviously you want to get to that end goal of whatever it's going to be. But if you have those little, stepping stones and those little level markers along the way, to be like, all right, cool, I made this achievement, I made that achievement, I made that achievement. It feels good inside. Just like, anybody who's a gamer or anything like that, you get awards or games for doing different things. Like, gamifying life in that manner gives us that, here's that carrot. And every once in a while, you get a little bite of that carrot, like, cool, that's awesome. This is what I'm working for. Let me keep on going. And so I've created that system for myself in my investing, so I can constantly get that little bite of the carrot to keep me moving forward. So let me see here. So today, so for me, I only have $50 left to add to this, but I do have to add to cash because, again, with the market running, and this is why I love this plan that I have, because as the market runs, my portfolio goes up. And because I'm looking at a percentage of cash of my portfolio, it just means I'm going to have more cash on the sidelines for any buying opportunities. And again, this goes back to the struggles I had in the first 2 years of investing, where I never had cash available to invest in opportunities. The market would come down, I wouldn't be ready for it, and I had no money coming in, and I had no money on the sidelines. And then I had to make that silly decision of, well, do I sell something that's down to buy something that's down that I like more, and then take a loss to then buy something else, hoping that it's going to go back up? I hated that. Absolutely hated that. So I created this plan, and now I will always have cash available to invest. And I have a whole plan that's set up to tell me what I need to invest in. And right now, all I have left is I have to put $8 into Procter and Gamble, $21 into Flynn. And for you guys who don't know, this is like a sleeper ETF. It's based upon India. It's like an ETF on Indian stocks. And again, it's a very small position in my portfolio, but I think India is going to be a very up and coming market. And so I bought in on this. Where is my cost basis on that? So for Flynn, my cost basis is like 34.88. So it's been going up quite steadily over the last year, looking at it just, almost $41 now. So I've been making a pretty good return, and they pay a dividend every 6 months. Not huge. The yield on this one is like 1.22%. So not going to bring anything home, but I'm just kind of like one of those little sleeper things. And then I have to add $21 to Microsoft. So $50 overall, but I've hit every category for everything else because I've been adding as it goes. So I added to AGGH this week. I added to Vici. I added to Realty Income. I added to PLD, added to Devo, added to Hess. Where is it? Hess Midstream I added to. So all those there doing well. And then because I added when they were lower, they have since recovered and pushed up even higher. Again, buying little dips along the way. And now I'm going to get myself to the point where probably next week I will hit level 2. And level 2 for me is going to be just certain buying criteria. So for instance, right now, These long-term, these ETFs of stable income, $1,400 is what I get them to. So phase 10 will be $1,500. So I will get every single one of these up to $1,500. Each one of these is going to be pushing up to $1,300 or $1,250. Each one of my individual stocks will be $500. And then here where Tesla is in my long-term growth plays, that will go up to $325. So again, I just set those criteria for myself, tells me how much I need to add. This down here tells me how much cash I have to add, but this is going to be pushing up to 10%. So that will be the highest level I get. So when I go to level 2, then it's going to be 10.5%. I'm going to go by either a half or a quarter percent, because I don't want too much cash, especially if we are going to get a soft landing. But I do want to make sure that that I have that cash pile on the sidelines in case we do get a massive downturn. I'll have that money to take advantage of all of that. But again, I did all that from the wisdom I have learned over the last few years and my own personal investing style and how I was getting emotions involved. And yes, I did train myself to keep emotions out, but because I work so many hours at my job and I can't focus on the market all day long, I just wanted a plan where I can kind of set it and forget it, but still be active in it and still go out there because I enjoy paying attention to the stocks. I enjoy buying into the stock market. I enjoy that feel of it, but I needed to do it at a much further back, arm's length place where I can just let things go and then have it tell me what I need to do. So I created this whole plan. And as my dad says, it's like, I'm getting tired just listening to you talking about it. And it took a lot of work. It did. But now that the work is done, I don't have to worry about any work at all. So it's very much like, even meal prepping. So meal prepping for myself for when I'm doing, my health and fitness stuff, I meal prep on Sunday. So instead of having to come home every single night and cook myself dinner, having to worry about what am I going to do for lunch every single day, make myself breakfast every single day, I make it all at once on Sunday and then I just warm it up every single day. So it's almost like going out and buying frozen dinners, but I've made them myself. So I know how they're prepared. They're exactly what I need for my own nutrition and they're ready to go. And I don't own a microwave, so I could make it faster if I did own one, but I don't. I just toss it in a pan on the stove, warm it up, boom, bang, done, and that's it. And so doing it with the stock market is very much the same. I've put all of that effort and work in up front, and now I can sit back and not have to take as much effort on a daily basis to get all that done. And I've done like the math on it. Like for instance, meal prepping takes me about 2 hours to get everything meal prepped on Sunday. Cool. People are like, oh man, that's 2 hours. I go, yeah, but if I was going to do this for myself every single day, you're thinking about it minimum half an hour, for dinner every single evening, breakfast, I'd have to get up even earlier to be able to make myself breakfast. And let's say it only took 15 minutes and let's say 15 minutes for lunch, that's an hour every day. You do that for 5 days of the work week. That's 5 hours versus the 2 hours that I was able to knock it out in on Sunday. So, just looking for any way of saving time. Sometimes you have to take a look at the bigger picture instead of living in the moment, be like, all right, well, let me look ahead. It was like, wow, I can spend 2 hours here on one day, or I can spend 5 hours collectively over the course of the week. I choose the 2 hours in one day. So for me in my investing plan, I have chosen to take the significant chunk of time up front to create a plan so that I can spend less time worrying about my investments and my portfolio on a daily basis. And, as my dad says, passion for anything is a recipe for success. Exactly. If you have a passion for something, you're never going to go wrong. You're always going to have that desire to learn. You're going to have that desire to improve. You're going to have that desire to, just get yourself successful. Because for me, I always have that mentality of like, there is no other option. Success is my only option. Like Eminem says, success is my only option. And that's kind of how I have viewed everything. It's like, well, I know I can succeed. Other people have succeeded. There's no reason I can't. Let me figure this out. And I go and I figure it out. Paul, I have a lot of positions. I do. I'm in the process of consolidating, but typically when you go into uncertain times or a recession, you want to be well diversified to be able to protect yourself and have, cover those downside risks. So for me, I'm leaving it open for right now just because I still don't have any certainty of the future, but I did clear out of a couple of things recently. So for instance, Oracle, for instance, I have a 5% stop loss in for, I'm not looking at it. So Oracle, I have a 5% stop loss on. So I sold out a half a share that I had in my SoFi account But I'm like, you know what? They've been running. So instead of just selling them outright, I was like, let me put a stop in. And it has pushed up about another $8 since then. So I've, increased the amount that I'm bringing in, by like 25 bucks. So I'm happy with that. And I'll let it ride. It's dipped down a little bit from its highs of about 179 the other day. But I'm like, I'm good with this. But Oracle does not have the cleanest balance sheet. Great AI potential, things like that. But if we're going to go into a recession, I'm concerned about their balance sheet. So I just decided, you know what? I don't need them. I have a lot of exposure to tech between VU. I've got, let me see, between VU, DGRO, CGDV, Devo. I've got a lot of those have a lot of tech in them. So I don't need to have Oracle. And so that's kind of what I'm doing is taking a look at the positions that I have and saying, you know what, is it worth having this position? Should I hold on to it long term? Is this a good buying opportunity if it's down? Or is it worth just cutting it out entirely and putting that money into other places? And that's what I'm looking at. And SVOL, having a little bit of a question about SVOL. It's one of my best performers that I've had. They've been absolutely outstanding. Their yield right now is about 15.5%, but they have been coming down relatively consistently over longer terms with their dividend. They were at, oh, that was weird. So they were at 30% and they're now down to 28%. And they pay attention to long-term futures for volatility. And again, the futures aren't looking as great. Potential recessions, a lot of uncertainty in the market. So I'm just keeping my eye on that. Like, I hate selling one of my best performers, but at the same time, my return total on this, is about 15.6%. So it's done very well for me, but I have to just pay attention and say, all right, is this a good buying opportunity, or is this an opportunity to sell, take my profits, and move that money elsewhere? So I'm constantly paying attention to little things like that to see what is the best opportunity for me and my portfolio. I'm not usually one to sell. I don't really like selling much. I just like to accumulate, and I have my long-term plans. But you never want to get stubborn and stick with something just because it has been good for you. If it's not going to be good for you in the future, you've got to pivot, adjust, and move on. So for SVOL, that's what I'm paying attention to here, is just monitoring that and seeing what's going on. And maybe I can go the route like I did with my higher income ones here, and maybe like thin the position out a little bit here and there, maybe take some profits off the top and move that money elsewhere. Something I'm taking a look at to see what I want to do. But yeah, that's just where I'm at with my thoughts there. But yeah, when it comes to my positions, every position I have has a reason. If you guys haven't seen them, I have done 2 of the 3 videos I'm going to do so far is my top 5 dividend ETFs and my top 5 BDCs and REITs. And next week I will be putting out my top 5 dividend stocks. So I will have all of those put out next week. So that'll be my third one. And I think I may end up doing my top 5 growth stocks as well. So things would be like, Tesla, Palantir, SoFi. I'll toss those in there as well. So I think I'll do a whole video on those at some point as well, to make it a whole 4-piece to kind of, show, my favorites in my portfolio. Yeah, the expense ratio of SVOL is high, but again, if it's paying out 15.5%, not terrible. It makes up for it, but it's one of those things where I'm using it as a cash flow generator. I'm not dripping money back into SVOL. None of those ones that you guys saw in that green area here, none of these here at all are getting dripped in. Even the REITs I'm not dripping in at the moment. Every single one of those right there, I'm taking that cash and utilizing it to just move my whole entire portfolio to the next phases and the next levels. And that's what I'm doing. I'm dripping the orange and I'm dripping the blue, but I'm not dripping any of this purple or any of this green. And so the expense ratio is high, but over time, the plan is that everything in the orange and blue will be what is going to be my main income sources coming in. The green will be a stable income source, which will be feeding the other 2 still, or paying for my bills. But the other 2 are going to be a growing income source forever. That is the intention between all of this, is the orange and blue will be the long-term, consistently growing income sources, whereas green is going to be the income supplier for bills and to feed these. and then the purple would be gone entirely. And eventually I'll get to the point where, hey, if I don't want to pay these expense ratios, I can dump them and just move that money into one of these other positions down here. Yeah, it doesn't appreciate it, but that's, again, I'm in it for the income. A lot of these green ones, I'm not in it for the appreciation. I'm in it strictly for the income generation. Some of them do appreciate. QQQI does, JEPQ, JEPI both appreciate. And even the BDCs that typically don't, like ARCC, Ares Capital, and Maine, both appreciate, which typically they don't. PLD is a REIT that appreciates, which is normally unheard of. So typically with a lot of these ETFs, you're not looking for that appreciation. It's just the income. But hey, if you're going to get some appreciation out of it, that's awesome. And of course, you always want to make sure that those dividends that they're paying out aren't getting cut. It's harder to tell with some of them because they're not consistent. SPYI is pretty consistent every single month. JEPI and JEPQ have been inconsistent, but they have proven that during times like 2022, though that year that is significantly outperformed just because of all the volatility. So they were able to bring in significantly more options revenue. And because of that options income, they were able to pay out much higher dividends to offset the fact that they were pulling down so hard. Jay Lizard, please tell us your thoughts on LASE. I do not know what LASE is, but if you want to let me know, I unfortunately, do I have Weeble up? Yeah, hold on. Let me take a look here. You're talking about laser photonics? Is that which one you're talking about? Just want to make sure that was the correct one. Is laser photonics. And I can bring this up because I found it. There we go. Weeble. Share. There we go. All right, so laser photonics. I mean, so just looking at the chart alone this looks like it was a huge this was a huge momentum mover. Looking at just the momentum pop it had. So this thing here goes bang, bang, and then came crashing down. I don't know much about it, so without doing any research on this and strictly looking at the chart, this looks like it was a very hyped stock and has now come crashing down to level off. So in order to determine if this was a one-time thing or if this is going to be hey, here was the hype and now we're kind of leveling off and we can grow from here, I would have to take a look and see exactly what the company does, what their fundamentals look like, look at their balance sheet and all of that to determine if they're actually going to be something worth investing in on a longer term basis. But for anybody who bought in back in July, and got this nice pop here, I mean, congratulations, you did pretty darn well. Now, let me see. And then, yes, as my dad points out, this is important as well. The tax on my plays here, and I'll bring it back up for you guys to see, because it is very important when it comes to taxes, and everybody's in different tax bracket situations. So there's going to be qualified, non-qualified dividends, and the non-qualified dividends are going to be taxed as regular income. So the majority of my income coming in right now, so for instance, I'm getting about $157 a month from these in the green here and $143 a month from the purple. That's all taxed as normal income for me. So it is a massive tax hit on all of this right now. Now I do have my side hustle. I do have my real estate. So I'm able to wash a lot of that. So I don't take that big of a hit on the taxes because of how I do it. But it's something that you really need to pay attention to when it comes to the taxes. Now, everything else down here, these are all qualified dividends. Now, when it comes to qualified dividends, it all comes down to, your tax brackets. And looking at the different tax brackets that are out there is really going to make a huge difference. Like for me, I'm at one of the higher tax brackets. So, I'm going to get hit with the highest 20% tax on those qualified dividends. If you're, and I looked at it for me in Connecticut, based upon the federal government and Connecticut, if my only income source was dividends and I brought in less than $48,000 in dividends, I would pay 0% in taxes. Kind of wild to think about, but thinking about how much I pay in taxes because I'm actually working. Now, there's a lot of stuff to work into it, and obviously everybody's in different situations. So I'm giving you guys no financial or tax advice whatsoever here. But when you're looking at what you're investing in, especially when it comes to dividends, pay attention to whether it's a qualified or non-qualified dividend. Pay attention to what tax bracket you are in. It's a very simple Google search. You can just go and Google, dividend tax brackets in whatever state you live in, and you'll be able to see those numbers very easily right there. And then if you have any other questions, contact a tax professional to get more information on that. But the basic levels that are out there, very easy to see on Google. And so that's one of the things that I factor in as well as the taxes. But again, because I have my side hustle and I work with my accountant, I'm able to work those numbers around with the write-offs that I have for real estate. And so while I'm maybe paying taxes in one area, I'm kind of lowering my my taxable income in another area. So it kind of all balances off. So again, I wouldn't be able to do this on my own without him and his professional help to make sure I'm doing it all legally. But because he is helping me, it's totally worth the money I pay him to make sure that I'm saving all of that money and I'm not getting whacked with extra taxes. But yeah, and as Paul says, better doing Roth IRA. And I do have a Roth IRA. I do highly recommend everybody use a Roth IRA because it's tax-free, because you're already taxed on that money before it goes in there. So any dividends you get in a Roth IRA, completely tax-free. All that drip and everything, you don't have to worry about any of that. Let it keep on growing and compounding over time. And it's significant. You'll see significant gains there. And again, you don't have to worry about the taxes. So it's really nice. But that there is just make sure you're paying attention to the taxes as well. And again, if you've got a Roth 401k, same principle there when it comes to the Roth IRA. A regular 401k, you will have to, obviously, when you sell out and take the money out, you'll get whacked with the taxes there. But if you can afford a Roth 401k, maybe a better option to go that route. Right now, where I'm at, I'm choosing not to do that, but I may end up changing that over in the future. But yeah, the Roth IRA, obviously a great place to do it. But if you're doing it in a taxable account, just be very careful of the tax implications on all of that. And as was mentioned earlier, the expense ratios add up over time significantly. It only looks like it's only like some of them are higher, so like a 0.99%, a 1% when it comes to the expense ratio. That's pretty high. It's only doing the numbers on, it's $100 for every $10,000 that you've got invested in there. But as that compounds over time and your position grows over time, if you're growing it, you'll pay more and more over time. And eventually that's just going to eat away and erode at all the profits that you're making, which is why for me, a lot of them are short-term plays, like 2-3 years, just to kind of speed up the process to get cash pumping into my other positions. And then at that point, I can get rid of them and then start using the other positions that are, regular companies, longer term ETFs, those qualified dividends to move up forward, which with much lower expense ratios. Like SCHD has a 0.06, very, very small. VU, I think, is a 0.03, negligible expense ratios. Going back to lasers for a minute, the fact that we haven't heard lace means a lot of investors haven't. Lasers are huge. They shoot down drones. I mean, if my thing about that is, if we were in a position, and of course we're looking at tensions in the Middle East right now, if this company was somehow able to land some sort of military contract where they were going to be used by the military to go out there and shoot down those drones from other people, great. But they would have to show that to me, that they have the capabilities of doing that. Maybe they do. And again, I don't know enough about the company right now to say whether they do or not. But quite honestly, that to me would be it. Because what other purpose do we have for lasers shooting down drones other than in military purposes, or for people just having fun, which probably will be illegal because you wouldn't want to do that. But yes, that would be it. And then what scale is that? Like, how big of a market is that right now? Maybe it will be bigger in the future. I don't know. Obviously, drones are becoming more and more used, so perhaps in a military aspect that will get used more. But again, I would need to educate myself a lot more on that as far as what the scalability is of all of that and what the actual demand would be. All right. So I think that's about wow. We've been on for almost an hour. You guys have been really awesome tonight. And again, at the event from last night, to me was great for very futuristic looking things, but it wasn't great for near term stuff. And again, I'm really looking forward for the next 6 months. You guys can put it down right now. My predictions are going to be we're going to be hearing about the compact car of coming at the Q2 earnings next year. I'm sure he'll allude to it or talk about on Q1 earnings, but we'll get a talk about a product release coming after Q2 earnings. At probably the annual shareholder meeting, we will get the actual reveal of the vehicle. And from there, we're going to then shortly thereafter get the actual release of the vehicle with production already happening underneath behind the scenes. That's my prediction for Tesla for the next 6 to 12 months. Don't know what you guys feel about that, but that's what I think. And then the macro environment again, I think is going to be very uncertain until about that same time frame. I won't be happy until I can see us in the clear by next June. So between now and then, I'm still going to be very cautious about a potential recession, and I will follow my plan. And again, for you guys who are members and patrons, you guys have full access to my spreadsheet at all times. You can see all my live updates that I make on there. And then if you guys want access to it, I will be getting that out as well. But yeah, so I'll be doing that. And then if I see the market change and I can deploy some more of my cash, I'll do it. But otherwise, until then, I'm going to play it as is. But thank you guys so much for watching. You've been awesome as always. I appreciate all of your support. Don't forget to hit that like button, subscribe to the channel. I'll catch you guys in the next one.